In 2004, broadband came. You started to get mobile devices and Wi-Fi. The UX standards for how you did like a high fidelity kind of experience on the internet became possible. And that actually was the birth and launch of YouTube, Facebook, SaaS, like cloud, like all these things emerged. And then the mobile revolution kind of folded in. And basically what was interesting about that is after 2004, it never turned back. It was just sort of the internet scaled up and the infrastructure scaled up. And I believe that's basically where we are with crypto. It will never go back, meaning it's going to become pervasive now. There's not going to be a question about is like crypto a thing. It's just going to be pervasive as infrastructure in the world.
The content presented on this podcast does not in any way represent investment advice. The information is provided for educational and entertainment purposes. Crypto assets are considered risky investments. You should always do your own research before investing. The opinions expressed here do not represent those of CoinDesk's editorial staff.
Imagine a blockchain built for you. No wallets, no keys, no hassle, just innovation. Welcome to Xion, the first walletless Layer 1 blockchain purpose-built for consumer adoption. With Xion, developers can build, launch, and scale products that are ready for the masses. No technical barriers for users, thanks to groundbreaking chain abstraction. All it takes to join the crypto revolution? An email. Say goodbye to complexity and hello to possibility. Ready to take the leap? Explore Xion today at xion.burnt.com.
Welcome to CoinDesk Spotlight. Here with me today, Jeremy Allaire, founder and CEO of Circle. Probably needs no introduction. This is a guy who founded Circle 11 years ago now. And it's around the time I got in crypto as well. I'll tell you, he had a much more clear vision than I did. He got into crypto, started a business to facilitate payments in the crypto space. And wow, has he built something special. He's a tech entrepreneur previously. He's taken companies public. So this is somebody who knows how to build a business, knows how to scale it. In the industry, Jeremy, you being here on our podcast is what we would call a big get. So I've been fired up to have you here. Thanks for being here. And I want to start with a real easy one just to allow you to relax. Did you vote for Trump or Harris?
I don't disclose my personal political selections. But as I said very frequently during the run-up to the election, that crypto is purple, and no matter what, I know we have a full sweep Republican administration, and I think there is a lot of pro-crypto dimensions to that, and agency heads and other things. At the end of the day, like we need to make law, and in order to make law, we need to have bipartisan efforts behind that law in the committees and in Congress and everything else. And so I think we got to see that happen. But I'm encouraged in terms of the election outcome, very specifically around the prospects for the digital asset industry and the crypto industry in the U.S. very clearly.
Yeah, let me just provide a couple disclosures here towards the front. So I'm the CEO. I'm Tom Farley. I'm the CEO of Bullish. Bullish is 100% owner of CoinDesk, the media company. I am not a journalist. This is not editorial content, and I will share some of my own views. I also want to disclose that Bullish is a longtime partner of USDC. We think very highly of USDC. We hold a bunch of USDC stables. And it's been a fruitful partnership. I hope both ways. And I opened with the political I'll say joke, but just to break the ice. But I also feel like you and I are kindred spirits to some extent in that I'll say it so you won't have to, but we both got screwed by the Gary Gensler regulatory overreach regime, and that's obviously now going to end. Unclear exactly what comes in behind it. I have some theories, but I'm far more interested to hear your own. Just practically speaking, staying on this topic of the election.
Yeah.
What do you think happens in crypto in 2025?
I mean, there's a ton. I think, one is just the backdrop for capital formation and the backdrop for entrepreneurship and and the like is going to be much stronger than we've had. I think that, this is an industry where when you're disrupting, the way various types of economics work or economic systems work or financial systems work, right? It's super attractive work to try and work on that. But I think for a lot of entrepreneurs, it was like, wow, I have to hire, so many lawyers just to get something basic done. Now, that's not to say that, building products in this space, it is complex, right? You are gonna deal with a lot of intersection with novel and complex legal issues. But I think the perception is that, we're gonna have both regulatory agencies and a Congress that wants to engage in genuine constructive rulemaking. And if you have that creates
and lawmaking,
yeah, rulemaking, and I sort of put those together.
Yeah,
right?
Put them together. Yeah.
Yeah. So kind of lawmaking, rulemaking, and constructively, right? People want to constructively figure that out. And I think probably for the first time, really, since this industry really developed, I think things like, digital tokens as new novel mechanisms for not only, incentives, but also utility and how those can be applied in various types of application and application service contexts. Like, that's a breakthrough. I mean, that's the sort of the Web3 thesis. That's a breakthrough. And so I actually think you're going to have, genuine lawmaking and rulemaking that's like, we want to allow innovation in these models to flourish. And bounded by the appropriate kind of risk management that's there. So I think it's going to be a far better environment for builders and entrepreneurs and for capital formation. My own view is separate and away from let's just call it the broadly legal issues. We're coming into a year where there's been massive progress on so many parts of this ecosystem. I mean, the core infrastructure of public blockchains has improved dramatically. The scalability, reliability, usability, cost efficiency. Like, we've made huge leaps, and we're kind of like at that. People talk about the last mile, the last foot, whatever, the last inches of kind of getting the UX right for this to work for both business applications and consumer applications all around the world. And so I really feel like in 2025, both because of the kind of policy environment that we have, as well as the continued technical breakthroughs that we have, we're going to see the adoption curve at an end user and a sort of enterprise and business level. The adoption curve is really going to start peaking upward. And that's going to be driven not by there's more people who want to hold Bitcoin in their bags, or there's more people who want to allocate Bitcoin to their corporate treasury. That might be a phenomenon. We could talk about that too. But I think it's going to be stablecoin driven, and all kinds of innovations on top of stablecoins in finance and in commerce, and not just stablecoins, but all the other kind of surrounding things that are necessary to support like robust financial and commercial applications. So I think we're going to see that curve really shift, which is super exciting, because I think I've been asked the question for 11 years, like, when is this going to go mainstream? And I usually outline here the things that need to happen. All the things are happening. And so like 2025 looks like a setup for a very strong year. And I think 2026 as well. I think we're entering a period of really powerful growth. And last comment, I know you probably got some thoughts or questions, but I put this back in time in earlier stages of my own entrepreneurship. And I think we're kind of in going into the 2004 of the internet. In 2004, like, broadband came. You started to get mobile devices and Wi-Fi. The UX standards for how you did like a high fidelity kind of experience on the internet became possible. And that actually was like the birth and launch of YouTube, Facebook, SaaS, like cloud, like all these things emerged. And then the mobile revolution kind of folded in. And basically what was interesting about that is after 2004, it never turned back. Like, it never turned back. It was just sort of the internet scaled up and the infrastructure scaled up. And I believe that's basically where we are with crypto. It will never go back, meaning it's going to become pervasive now. and there's not going to be a question about is like crypto a thing. It's just going to be pervasive as infrastructure in the world.
I generally agree with you. I think Bitcoin might be the best use case. Just holding Bitcoin might be the best use case of digital assets yet, and perhaps forever. Followed by payments, powered in large part by what you're doing. Like you said, potentially some new rules of the road that make it easier for entrepreneurs to raise capital with sort of tokens, and not worrying about, oh my gosh, am I falling afoul of some SEC rule? Having some clear rules around that. But I think underpinning all of that, and the one thing that's vague to me, there really are no accepted layer ones by regulators all around the world, and hate them or love them, they exist. And so hopefully 2025 will be the year where layer one standards become codified and become trusted. And I can, in fact, run an important financial service on fill in the blank, Solana, Ethereum, what have you.
Well, you can, right? I mean, obviously you can, like technically, and people are. I mean, there's trillions of dollars of economic activity happening on layer ones and layer twos, right? I mean, that's just.
I mean, regulatory acceptance. For example, we're going to replace DTCC, and we're going to do it on a blockchain because we're cheaper and we're cutting out layers. That's all fine and well until the SEC says, "What blockchain are you going to use?" Oh, we're going to do it on Solana primarily, and they're going to go, "Nope."
Yeah, so I think that this is
an issue.
Yeah, so I think just as an example, right, MiCA in Europe has set forth a framework for stablecoins as legal electronic money, and that is a regime, including a supervisory regime with standards set by the banking and prudential regulatory authorities, and it includes the use of public blockchains as how settlement happens. And now, financial institutions in Europe can issue digital tokens that use stablecoins as funding and settlement, and those digital tokens can trade on crypto asset service provider exchanges. And so you actually have it allowed under the regulatory regime in Europe, and it's nascent, but it's there. But I do think your point about like a DTCC is sort of when you get to like the what is often, the systemically important financial market utilities, like the business you used to run and the DTCCs of the world and the CMEs of the world and all that jazz. Like the regulators are like, no, this has to be like you lock down infrastructure that you completely control, and you can't use the public internet and so on. And that's what I like to refer to as that's sort of the ultimate boss fight still for blockchains.
Yeah, I agree. That's my point. That's my point. Is there's still a battle to be won there, and if that wins, then your 2004 analogy, I love it, and I may adopt it, and I'll always footnote that I got it here on CoinDesk.
And remember that cloud was a dirty word to corporations, to people who ran IT organizations, to anyone who ran any kind of important industry, finance, insurance,
anything,
CIA, right? And it was okay because cloud was great for startups and innovators and SMEs, and then it became good for like projects coming out of large corporates, and then the infrastructure got better for private clouds, different forms of security, operational resilience, all this stuff, and that's going to happen with public chain infrastructure too. I mean, no, we're not yet talking much actively about sort of fourth generation blockchains, but I mean that's the work that's emerging now, and fourth generation blockchains will work to solve these deep issues around security, privacy, settlement finality. There's a whole series of things that are important that are not yet solved on the existing layer ones, and so that's where people should be investing. There's capital should flow in because we need to develop that infrastructure.
Let me take you back to the what I wish were a boring and obsolete topic of Washington, D.C., but unfortunately it's still so relevant. I'm willing to stipulate there will be a bill that passes that covers stablecoins, whether that's ultimately is merged with a bill that's part of broader digital assets, like for example, defining a new class of security or something along those lines, or it's its own bill, like FIT 21 or what have you. But the mechanics don't matter. It's tactics versus strategy. What do you want to see? And the answer can't. I stipulate the answer can't be. I don't want to see any bill. I'm a libertarian. I want to write with it, but because it is what it is. We require Congress to pass a bill in this country in order to unlock. Unfortunately, in order to kind of unlock the further growth of stablecoins. What do you want to see in a bill?
Yeah.
What
I mean,
exactly
look,
you could write it? Jeremy Allaire could write it, and it were
yeah,
4 bullet points. No
yeah.
bullet point is longer than 7 words. What would those 28 words say? You know what I mean?
I can't do it in 28 words, but I'll do it in 2 minutes. We have been advocating for stablecoin regulatory frameworks at a global level, at a national level, all around the world for like 4 years or longer. And so we're very close to this. And we consult with every major government on this. We've been highly consultative to Japan, Hong Kong, Singapore, UAE, the UK, the EU, and are obviously very, very involved in all the enormous amounts of hard work in the House and the Senate with Treasury, Fed, all the agencies that have looked at this. And so we've got a lot to say on this. And, I think the good news is that, the kind of legislation that, the McWatters bill, as it's famously called, like it's basically like at the finish line. It's really, I think, addressed a huge range of different equities, as it were, across, non-bank issuers, including bank issuers, clear standards that align.
But if you could just pick the perfect bill, what would it be? What would it say?
I think the perfect bill would say, payment stablecoins. That's the phrase they use, but basically like fiat stablecoins, dollar fiat stablecoins can be issued under U.S. federal statutes and laws, where those dollar stablecoins that are issued are deemed to be legal electronic money in the United States. They could be treated as cash or cash equivalent financial instruments within the financial system, within accounting standards, would have a set of federally driven supervisory standards that
For the issuer? For the issuer?
For the issuer. So the
legal certainty that if the thing is issued both for the issuer and the user, it's a real thing, it's money. Number one. Number two, minimum standards for someone to issue so that we can be comfortable.
That's right. Minimum standards that are, consistent with good prudential risk management, right? That has to do with the makeup of the firm, the operational capabilities and resilience, the compliance capabilities, like the things that you'd want for a money issuer to have. And I think those standards should be defined. They need to be defined by like the prudential, regulators in a short period of time, like maybe 6 months after the bill is put into law. That's what we've seen around the world. Like some have taken a year, some have taken 6 months, but let's just say 6 months, 180 days to come up with that rule. And to have a framework then where a stablecoin issuer can become an issuer at a state level. So you want to go to New York State and be an issuer, or you want to go to California and be an issuer, you can do that, but you have to follow those standards. And just like we have a dual banking system where you've got state and federal banks, you can have state and federal stablecoin issuers. And obviously, the bigger you get, there's some threshold of size complexity where you're probably going to need some federal overlay, right? But if you're small and getting started, we need the ability for startups to be able to get into this and not have this huge burden. And so this needs to encourage startups to be able to get into this field, but then graduate into greater levels of supervision. And, and I think the reserve model should be as safe as possible, right? Those are really well defined. I think there should be capital rules that are tailored to the size, scope, complexity, risk of the stablecoin issuer, and based on the common, what would largely be fungible reserve standards, which would be like repo, T-bills, cash.
And for anyone who has stayed with us nerding out on this stuff because you and I love it, but isn't entirely familiar with what you're talking about. Really what you're saying is if you have 50 billion of stablecoins you've issued, that you have 50 billion of cash or cash equivalents against it, plus a cushion. Yeah. And that cushion might be slightly less than what a bank might have, because maybe you could argue it's a slightly risky portfolio, but you need to be holding an extra 5-10% on that.
That's the bank level, right? But for stablecoin, it's going to be considerably lower because there is no lending risk. You're not rehypothecating it. And this is another piece where I think the U.S. could get it right. Is I think if you are a larger issuer and you are federally registered and supervised, that you should have the option to hold your cash with the Federal Reserve itself. And so you've got both government debt and cash at the Fed. to really make this the safest base layer possible for money on the internet.
Wow. Okay, I hadn't contemplated that, or I had missed that. Let me ask you the elephant in the room question. You have a competitor that's competed very effectively. We had Paolo on the podcast. That to my understanding, and I'm not an expert like you are, they issue, let's call it, outside the United States. So will minimum thresholds on issuers apply for non-US issuers who are issuing USD stablecoins?
I mean, I think we have the reference of other stablecoin laws that have emerged around the world. So, in Japan, if you're a foreign issued stablecoin and you want to be made available in the Japan market, they have very clear rules for how to do that. We expect USDC to be widely available in Japan on the basis of that. In the European Union, which covers, the EEA is like 800 million people and close to that, they have a very clear rule that if you want to offer, sell, distribute, and utilize, fiat stablecoins, whether it's $1 or €1 or any other in the EU, you need to issue in the EU and be supervised in the EU under those rules, right? So we have a structure where we dual issue. We issue in the EU. We're supervised by the ASPCR, the Banque de France, under rules set by the European Banking Authority and the markets authorities and so on, and so properly supervised. And USDC is now a widely available product in the EU. The US will probably follow a similar standard, which says if you're going to have a dollar stablecoin that is held to the standards that is something that the US believes should be the basis for a digital dollar in the United States, to persons and entities in the United States, you got to follow those standards, right? So you can come in and get compliant, right? You can come in and register, you can get your product up and running there, and everyone should have the opportunity to do that. And so I think just having clear rules and then saying, if you want to serve the United States or persons in the United States, this is what you got to do. It's not to say you can't go do something somewhere else, like the euro.
You can issue out of whatever Cayman and
but not serve U.S. persons.
And Argentines and Peruvians.
And this is a very global market, as we know, and there's global demand all around the world. But I also think, just by the way, I mean, the G20 met last week or the week before, and they're talking about crypto policy and stablecoin policy, and there's a big discussion about stablecoins as currency substitutes in emerging markets. That's like the financial ministers and the heads of the central banks of all these countries are there saying this could be a problem. We need regulations to clarify how foreign stablecoins will work in Argentina or will work in South Africa or Kenya or Vietnam or whatnot. And so, that's not going to happen overnight, but over time, you're going to want to know you've got, digital dollars held to a certain standard that are actually part of the financial system that a public accountant and a financial institution would know how to treat as, a balance sheet or collateral or other, and know what the risk is and treat that appropriately. And that also the regulators around the world would know how to treat that and then, deal with its kind of distribution and use in this market.
I just want to observe, I think your views, first of all, I've learned a lot, and your views are pragmatic and mature, because you could come on here and you could say, oh, if you're creating dollars, it's creating grave systemic risk to the US market. And so even if you're creating dollars internationally, we should add to our law a prohibition on US banks or broker dealers, right, or anybody who gets access via correspondent bank from allowing such issuer to hold dollars, which would be an obvious shot at your opponent. And you're not opponent, your competitor. And you're not saying that. You're saying something far more balanced and practical, and you're looking at other models and you're saying, hey, look, I'm here to compete. I'm not trying to eliminate.
Absolutely. Yeah. I mean, we all know that this is like a very early market, right? Like, the TAM on dollar electronic money is over $20 trillion. The TAM on legal electronic money in the world is almost $130 trillion. The TAM on the utility of money and all the fees generated, for whether it's an exchange or a retail payment system or a remittance system or B2B, all that is like $1.5 trillion of revenue. So, the internet financial system is tiny today. We're barely scratching the surface. We want this to be in the hands of 5 billion people. And so I'm trying to think about what's necessary for this to work for 5 billion people and millions of businesses and financial institutions, and just try and keep building to that.
I agree. I just like if I don't know if there's a prediction market, on wherever, Poly market or whatever. I'd like to see a prediction market, total stablecoin issuance hits 2 trillion by the end of December 31st, 2026, and I bet it does. My team is sick of hearing me say that stablecoins are the next killer app, because I think they just work. In that vein, I want to change topics, and this is a kind of a pet issue for me, and I hope I'm not betraying confidence and based on our past conversations to tens of thousands of people who may tune in. But we've talked a lot about stablecoins, or on and off, I don't know, a couple times a year, and the conversation is always around USD. It's always around USDC, and even when EURC comes up, which is for the listeners and viewers, that is
it's the largest euro stablecoin right now.
Yeah, Circle issued euro, largest euro stablecoin, Circle issued euro stablecoin. That conversation lasts for a handful of seconds. That permeates the industry. No one gives a crap about anything other than US dollar. I'm saying that, not you. No one is talking about yen stablecoins. No one's talking about won stablecoins. No one's talking about sterling stablecoin. On the margin, do you hear it? Yes. So here's my question. Is this all just a USD thing? 10 years from now, do we look back and go, holy crap, this was the dollarization of global finance? Because I'm not sensing any momentum.
Yeah. So I look at this in two ways. I think one is, like, global finance is dollarized. So we know that already, right? 65% of trade is settled this way. If you look at corporations, wherever they are in the world, where they're going to settle transactions, invoice, financial products in a huge percentage of markets are also dollar denominated. So I think part of it is it's mirroring the world that exists out there today. Now, the other part, though, is it also reflects the fact that right now, dollar stablecoins have been heavily driven by markets activity. So markets like yours, bullish, as an exchange, and markets, kind of drive towards one currency, especially when you're dealing with ARB and global reach and all these other things. And so stablecoins have kind of fueled that, and the liquidity of dollar stables has compounded that. And so from a crypto markets perspective, it makes a lot of sense that it's dollarized. Now, as we've started to get into more use cases for stablecoins, where we're basically seeing stablecoins as a store of value, stablecoins for cross-border settlement in trade and commerce and remittance, which are all growth drivers in our business, certainly. That is also predominantly dollar denominated. But what we're seeing, and this is, I think, really encouraging, is there's an enormous market building up all around the world for local currency rails, local currency on and off ramps, everything from P2P markets on the big exchanges to really excellent on and off ramp providers that are kind of productized, to OTC providers that are basically helping people do bigger, chunkier forms of settlement with different currencies. We work with some large partners that are really driving that utility. And in that case, USDC is being used almost like an alternative to SWIFT. It's sort of like the settlement layer. But on the other sides, it's sort of fiat in. That's what Kai Sheffield at Visa likes to call the stablecoin sandwich, right? It's sort of fiat in, stablecoin settlement, fiat out. And so we're seeing more of that. We're seeing more of that kind of net settlement flows, other things. What that suggests to me, though, is that the next step is that instead of those fiat currencies being on and off ramp into traditional banking, those fiat currencies are themselves on ramped into local currency stablecoins, and they stay natively in stablecoins. And then you get super high velocity money that can work through on-chain FX, and you get the most effective FX markets in the world. It's programmable, composable. People can weld it into their enterprise in lots of different ways, layer options on it through DeFi protocols. You get a really exciting world for how cross-currency works.
Or do they never convert it to the local fiat? That's what I'm wondering. In other words, do I pay my taxi in Buenos Aires with USDCs?
So this is going to come down to major economic blocks and major countries and what they determine is within their monetary sovereignty. And so, in the EU, corporations pay for their goods and services with each other, and households save in euro and pay for goods in euro. And it's a giant economy. And I don't think that's changing. And in fact, the European rules actually discourage the use of dollar stablecoins for that kind of retail payment transactions. And so, like, the benefits of digital currency money, the benefits of stablecoin money, technologically, from an innovation perspective, from a utility perspective, from a programmability perspective, all these powerful technological characteristics apply whether it's a Thai baht stablecoin or a Euro stablecoin or a Philippine peso or Mexican peso stablecoin. They all are the same technological benefits. It's sort of like, streaming audio of your local radio or your local artist is just as good as the streaming audio of a US pop star. Like, everyone wants to use streaming. So I think, same thing applies here. And I do think over the long run, you'll see fewer currencies used overall. It just seems like the internet's going to drive that.
But that's the direction of travel. It has been for the last 50 years.
And I think that will continue. But I don't think that, I do think that there are going to be major other stable coins. That's why we did make a bet on Euro, and it's early. There will be other major stable coins and local stable coins that are important to kind of the fluidity of how this internet financial system works.
If I could have another prediction market, I actually think we will see in the next decade many, not just a few, but many countries flip to the dollar, and they may do it in the name of a peso, but just purely peg, and tethers and US.
And maybe like wrapper tokens on top of dollar stablecoins, because they get all the technology. It's like leapfrogging into mobile, right? Like, this country says, well, screw it, we're just going to like leapfrog into digital currency.
I have one quick question, and then perhaps one longer one, and I'll wrap up. The quick question: I tend to pay attention to what smart people do, and you're a guy who's built a close to $40 billion issuer of stable coins, and you've been talking about Hong Kong a fair amount. In fact, last time I spoke to you, you either were in Hong Kong or you're going to Hong Kong.
Yeah,
made an investment in Hong Kong. We too are fairly sizable in Hong Kong. We have 100 amazing employees there. We've launched Hong Kong Consensus February 19th and 20th, which is a big bet for us. And the reason we do it, we think Hong Kong's an interesting market. Certainly the regulator there is bona fide and credible, super credible, even tier one. And then also it's a potential gathering point over time for a whole bunch of billion people, north of the border there, not day one, but maybe at some point in the future. Why are you interested in Hong Kong? Is it some of those same reasons or something else?
Well, I mean, just looking at the world today, just looking at, Hong Kong is a major pocket of invested capital. And that's why it's also a financial center hub, as an offshore financial center for Greater China, but also as the nexus to all these other parts of Asia and the rest of the world. And, we see a lot of demand for USDC in the Hong Kong market. And so, we offer direct banking in Hong Kong. So institutions that want to create and redeem USDC can do it nearly 24/7 in the Hong Kong banking system. We have many major institutional clients that have onboarded with Circle globally, but that are domiciled in Hong Kong. And so it's actually one of the most important markets that we serve already. And then you likewise now have a policy environment and a regulatory environment, which is really trying to build Hong Kong into a robust center for Web3 firms, digital asset firms, financial applications, and the like. And I expect that to grow. And as we know, Hong Kong is the kind of the laboratory for Greater China. And I think if Hong Kong can successfully establish a clear rules-based framework that allows for the adoption of digital assets safely in a variety of spheres, that could be the basis for how that could be applied more broadly with China. And I think what's really interesting right now is, with the Trump administration being so pro-crypto and clearly going to lean into not just Bitcoin, but the broader market, I think it's going to put a lot of pressure on other major national economies and national governments to step up. And so, it may be that, the United States basically saying this is a strategic industry, and we are going to drive this. is going to accelerate other markets really trying to do that too. But look, at the end of the day, Circle is a global company. Our headquarters is New York, but we are a global company, and we have operations around the world. And we look at each of these markets, and we want to make sure that we are invested in and aligned with and operationally capable in the markets that are driving a lot of powerful activity. And by the way, Hong Kong is also a powerful market for cross-border commerce and cross-border trade. And that's where a lot of the funds flows for, suppliers and buyers, and globally how capital works, Singapore and Hong Kong. And so, if you're going to play in global commerce with stablecoins, you have to play in these markets as well.
So let me ask you one final question. I've followed the relationship between Circle and Coinbase and haven't always followed it perfectly. It may be my ADHD, but let me take a stab to make sure I understand it. And there's been some notable changes over time. Do I understand it roughly correct that at this moment, after some changes for the better, I can think of Circle is the USDC issuer in totality.
Yes.
Coinbase, I can really think of as to some extent a distribution partner who shares in the economics to the extent they help distribute or custody or what have you. But it's really this is a Circle thing.
That is absolutely correct. So
Okay.
That is absolutely correct. Yes.
Look, go ahead.
Yeah, I was going to say, Coinbase is an incredibly important distribution partner. They've made it a critical product across their retail products, their institutional products. They're innovating with it. We love that. And as they grow that, they can grow their business. But we're building partnerships with tons of firms in the industry, and we're building firms not just with exchanges, but with major firms like Stripe that are driving USDC in payments, and relationships with banks around the world, like Nubank in Brazil, that's driving USDC as a digital dollar. We're building relationships with other exchanges, payments companies, fintechs, neobanks, payment service providers, all of these. And Circle has the ability to build great partnerships that also help distributors grow and get economic value as well. And so we're a market neutral infrastructure company that wants to make this a widely available technology and financial capability for everybody. And we've got the tools to do that. And so I think you and the industry and hopefully your audience on CoinDesk will be hearing a lot from us on the major partnerships that we're continuing to build around you.
And we didn't even have time to talk about all the ones you've already struck that I find interesting with Stellar and MoneyGram. And well, in general, you've built a great company, and congratulations. Even the last 2 weeks, your market cap of USDCs is up like $4 billion. Something ridiculous. So, and I think there's room for multiple competitors in this space. Absolutely. And there will be more competitors because this is a hugely growing market. There's a giant pot of money to be earned because it's providing tons of value for customers. And USDC will be successful in that. I have no doubt. And it's largely because of your leadership. So thank you for being here today. Thanks for all you do for our industry. Any closing thoughts or remarks before we sign off?
Well, I appreciate it, Tom, and I think what you're doing, obviously at Bullish and with CoinDesk is great, and we're excited. We're excited for coming back to one of your earlier questions. 2025 is going to be an awesome year.
Agreed. Thanks, Jeremy. Thanks all for watching.
We all want to believe in something. In Chinese, belief also means trust. We want to trust our systems and each other to explore new frontiers and build a future beyond what we know. For the past 10 years at Consensus, pioneers, builders, and dreamers have gathered together to create a new financial system where everyone has value. Join us at Consensus Hong Kong, where belief becomes real.